Are you gonna record this one? Oh.
Yeah.
Probably ain't want to start recording this early, huh, sir?
Well, I'm doing it so I won't forget it.
Nah, for sure.
Shit, you just talk. I mean, you don't got to start it already. I'm just doing it so I won't forget it.
Oh, yeah, it only gave us that option. Start recording and deny. I ain't gonna let you forget.
Huh?
So I ain't gonna let you forget.
Oh, all right.
Don't give Sunshine a hard time.
All right.
All right, how y'all doing tonight, man? My name is Tyron, pronounced like Byron, but everybody call me Ty, so I go by Ty. So tonight we going over a little field class. My boy that gave me the floor. I keep telling him about these fields. I mean, he know what it is. You know, he just seen me use the fields. A couple people on the call familiar with me, but I've been trading since like 2022. I think I picked up the strat probably about a year into my journey. I used to kind of really rock with the EMAs, which I still use EMAs from time to time, but I was kind of rocking with EMAs only. Wasn't familiar with the strat at all. When I first jumped into the strat, I didn't like it at all because I didn't like the broadening formations. I was like, yeah, I wasn't trying to have my screen looking all like a whole spider had took over my screen or something. Like I still don't utilize broadening formation to this day, but I mean, I know people that use them. I know they work. It's just not my style. So yeah, I'm a stratter, but I do not use broadening formation. That's probably the only thing I don't use. And yeah, that's what led me to, learning fibs and kind of rocking out with fibs. So we're gonna get into it. Share my screen. Now I'm more of a hands-on type of guy, but I do have a presentation for y'all. So I call this presentation "In Fibs We Trust" because I really trust my fibs. Once you actually learn, how fibs work, what levels you should really be paying attention to. I mean, you really have to trust your candles. Like it's all about letting your candles close. I mean, as we know, price likes to push in different directions, but until a candle actually closes, I mean, I see a lot of people just jumping in and out of plays and they getting in, while a candle is still moving. And that's a perfect way to kind of set yourself up for failure. So one of the main things when you utilizing fibs is you have to let the candles close. So let's get into it. What is the Fibonacci? The Fibonacci retracement tool plots lines using percentages based on a mathematical relationship within the Fibonacci sequence. These percentages provide support and resistance levels that can be used to find your target price or to identify entry and exit points. The Fibonacci levels will also help distinguish between pullbacks and reversals. The levels you should pay attention to, because that's the question I always get is like, okay, I see a lot of different field levels, but what level should I be paying attention to? When I'm using the field retracement tools, the levels I pay the most attention to are the 23.6, which is referred to as the shadow pullback, and the 38.2 and 61.8, which is your golden zone areas. Those will be the areas where you're usually looking for price to pull back to those areas, which we'll see when I get on the charts. But price loves to pull back to these, these two levels, these golden zones, before it actually either reverses on you or just continues on the trend. The power of the 50%. I mean, I know we've all heard it. A lot of people that use strat, they use that 50% indicator. I'm one of those people. So, I mean, I love 50% levels, and it's no different with the field. As far as the Fibonacci, the 50% is not a part of the actual Fibonacci sequence, but this level is widely used and considered a major support or resistant area. As far as me, with my charts, I also chart and pay attention to the previous day, the previous week, the previous quarter, and the previous year, 50% levels. All of those levels, when you see my chart, you will see those levels on my chart. I actually like strat teach. I know a lot of people that use strat, they kind of tend to push more towards strat assistant. I don't think anything's wrong with strat assistant, but I just don't like it. I feel like I can recognize my failed twos, like your failed two up, your failed two down. I recognize those a lot faster just using the strat teach, because you don't have all them different colors like with strat assistant, like how they be having the purple colors. Like I think your threes be purple. I know you can change that, but that's what kind of made me not like strat assistant, is all the different colors that they make your candles. How to measure an uptrend, and then I'm gonna talk about how to measure a downtrend. Now, like I said, I'm just giving y'all the breakdown, but then we're gonna do the real class on the charts. So how you measure an uptrend using the fibs. To measure a single bullish candle, just one candle, you would take your fib tool and place it at the bottom of a bullish candle's wick, and then you extend the fib or pull the fib to the top of the candle's wick. So basically, you're starting at the low of a bullish candle, and you extend the fib to the high of the bullish candle. The reason we do that is, if you know candle orientation, that's how a bullish candle opens. We know bullish candles open at the bottom, and they push up and close at the high. So that's basically what you're doing. If you're measuring a series of uptrend candles, you would place the fib on the wick of the lowest candle before that uptrend starts, and you will extend it to the wick of the highest candle. Like I said, this might not make sense when you're reading this long paragraph, but when I actually do it on the charts, it's going to all make sense. How you measure a downtrend. To measure a single bearish candle, you would take your fib tool and place it at the top of the bearish candle's wick and extend or pull it down to the bottom of the candle's wick. Same situation. Basically, you start at the high of a bearish candle where it opens, and you extend the fib tool to the low of the bearish candle. If you're measuring a series of downtrend candles, you would place the fib on the wick of the highest candle before your downtrend starts and extend it down to the wick of the lowest candle. Let's take it to the charts. Now we can see what I'm talking about, with all this stuff makes sense. Anybody got any questions first? Before we get into it? Or everything is tracking right now? All right, this is Tuesday. So today was Wednesday. We're looking at Tuesday. First, I want to show you what I was talking about measuring a trend. So like we know this is pre-market. This yellow area is your pre-market. So if I was going to measure this with my Fibonacci, first of all, let's open the fib. I want to give y'all I just want to give y'all my levels first. So before I even measure anything, let me just put these on here and go to the settings. So these are the settings that I use for my fib. If you want to screenshot that, write it down, whatever you want to do, these are the actual levels that we'll be using for this fib. So I'm going to give y'all a couple seconds to write that down. Okay, if you need them again, I will show them at the end of the class as well. And obviously you can see them to the left of the field. So like I said, it's the 14th. If you want to follow along on your charts, we're on Tuesday the 14th. I'm measuring the pre-market move. So if you notice, pre-market was basically dropping before the market opened. Price was going down. So if I wanted to measure this downtrend, remember what I said. If you take your fib, you want to start at the high of a downtrend. Place your candle at that, or place your fib at your highest candle, and then pull it down or extend it to your lowest candle. So what you're looking for is those levels that we talked about. How we said, 50% is usually your biggest level. So price loves to play with that 50%. If price closes above the 50%, I would be expecting, calls. But if price, continues to respect or stay under the 50%, I'm expecting puts. So if you look at this first candle, I'm in Houston, so I'm not on Eastern time. I'm on Central time.
Sorry, quick question. When you said pull it down to the lowest candle, why is it not going all the way down to the wicks of those candles? Or is it?
See it?
It's
It
the
actually
dotted
is.
line.
Oh, it's the dotted line. Okay.
Yeah.
So what
No,
are these black
that dotted
lines?
line ain't nothing but that dotted line is just support. But this is the wick of the candle. You see that red candle? It is the wick.
Oh, I see. Okay, so the black lines are the actual tool, and then the blue is like the output of the tool. Is that the
No,
way?
this blue. Let me take that blue off. All that blue is that's my swing high and low. That's an indicator. I just
Oh,
removed
okay.
that.
Okay. Okay, thank you.
So yeah, you're right when you say the black line. The black lines are the field lines. Yeah, I extended. If you look at it, you see how it says extend lines right when it says
Uh-huh.
extend. So those black lines, you see how my colors are black.
Uh-huh.
That's what you're seeing. So like if I made this, red, you'll see that red line.
Oh, okay. I see. Okay, thank you.
No problem. So like we was talking about, if you see price stay underneath the 50%, that's a great indication that hey, we're going down. The price is still in a downtrend. So if you look at this first candle, which was your opening candle, if you wanted to play this, look at where price opened. Let me pull my screen down a little bit so you can see.
Way above 50%.
And let's get rid of the sell button. So if you look at the top of the screen where you got your open, high, low, and close, you can clearly see that when price opened, we opened at 657.17. Well, if you look at the field, that was our 50%, was a 657.17. You can see it to the left. So we clearly opened right at the 50% line, and then we dropped down. So you could have caught this move from right off that 50% to where we bust down and went down to 653.17. I don't know if y'all can see the top of that screen. There you go. Now you can see price better. So can you see the open, high, low, and close at the top? So you see where we opened up at 657.17. So yeah, as soon as price opened,
Hey man,
we
hey,
dropped.
hold up, man. Whoever got y'all shit on, man, put y'all shit on mute.
Now, what I get in the habit of doing, and this is what I do every morning, I'm showing y'all how we would have measured the downtrend from pre-market. What I normally do is I wait on the close of the first candle. Whether you trade on the 30-minute, I typically use the 30-minute and the 1 hour. So I'm always putting my fib on the 30-minute candle, which is the first close of that candle. I just wanted to show you how you can measure the actual pre-market, and you still could have caught this move, even if you didn't wait on like a 30-minute orb. But now let's do it the right way. And we're going to put that your fib on your first candle that closed, which was this red candle. So you put your fib on your first close of your first 30-minute candle, which is this bearish candle. And like I said, you're looking at what price is going to do. You expect price to either pull back to that 618, which was your your shadow retracement. So that's your pullback range, which we see it didn't do that. Or you expect price to respect the fib and continue to push up. So look where price opened on the second candle. It clearly showed you that we was in an uptrend because we never even got down to your pullback. Now you expect to at least get back to the pullback. 618 is your pullback, and then the 50% is the area that you're really watching to make sure price doesn't close beneath that so you don't see a reversal. So as long as we stay above this 618 area, we know we're still in the uptrend. So we are stratters. I think most of this group is strat. I know Sal runs a strat group. So we already see this move. This is a 2-2 reversal. We also see that from that first candle, price pushed down and then pulled all the way back up. So we know sellers had control of the market, but then price was bought back up. So we're kind of expecting a move up anyway. But now this gives you, another level of confluence, because as soon as the market opens up, or as soon as this candle opens up, we see that it stayed above your fib level. So once you take this 2-2 reversal to the upside, what you do is you continue to pull your fib up. So how you got it on the first candle, once this next candle closes, you pull it up like this. And you continue to look to the right and see what price is doing. So this is how we do it. Just continue to pull it up. And y'all stop me if you have questions, but like if I'm going too fast. But as you see price, see these two candles, some people would have jumped out on this when they see this doji and then they seen a shooter. But as long as it's staying above your fib, you have no reason to get out because you would have pulled it up Even when you got this shooter, you would have pulled price up again. And look how it's respecting your field. It's hitting your 786 area, which is nothing but, like I said, that's just a pullback. That's not even a deep pullback.
Hold on, Todd. So you pulling it up with the next candle?
Exactly. As each candle closes, if you stand in your position, you pull it up. Now, let's say you missed it. If you didn't catch it off this first move when it went to reversal, then you could have just put it on this candle, right here, your second candle.
Gotcha.
But you would have just put it on this candle, the candle that you got in on, and you still look for price to do the same thing. Like, you see how prices still continue to do the same thing and still stand on the top of the field?
Yep.
That's literally how you do it. But we started from the bottom. So
okay. I'm following.
So let's go back down here. We was at this candle. So you got your little pullbacks with these little red candles, but nothing has told you to get out. So as you continue to walk price up, look how it's just respecting your field. Even when you get all the way up here to the high of the day, we never got under the field. Now you can see where we did go back to that 382 area. Because remember, I told you, let's go back to the charts. Because you probably forgot the numbers by now. But remember, we talked about this area, the 38.2 and your 61.8, your golden zone areas. And then that 23.6 is like your shadow pullback. So if you're looking at price, we see this 23.6 where we're never really doing anything but just hitting it. Now you can see where price, when it finally pulled back, it went to that golden zone we was talking about, that 38.2. But I wouldn't want to sit through all this. If I was in this, like I said, we are strategists, so we're not just using the field. We also using candle orientation. We're still looking at candles. So I would have exited this play. And if you ask me why, because look at these 4 candles. I mean, for one, your candles are shrinking. So we know we're losing strength to the upside. But then you get 4 candles back to back, which is basically all doji showing indecision. But they also bearish candles. So I would have exited anyway. And then as you see, you got this big drop right after that. But still, if you look at the drop, it was still respecting your field, but only dropped to your pullback area and came back up. So you still could have been holding this play, but you see that was the end of the day. Like, it was 2:30 my time, so that's 3:30 Eastern. So it was like 30 minutes left for the market. So you clearly could have wrote this, you could have wrote this trend up all day. Let me show you another example.
Excuse me, I got a question.
Talk to me.
Does it matter what candle we start on, or should it be like at the end of a strat combination where you're about to enter?
It doesn't matter what candle you start on, but like I said, what I do is I start on the first candle, the first closed candle every day. Like today,
okay.
Like this was today. This is today's price action. So literally, put my favorites back on the chart. Literally, I would have started like this. I would have started off this 3 candle right here. We know it's a bullish 3 candle, so we start at the bottom of the candle and we pull it up. So I would have sat there for that. Now we already, I'm a strategist, so like I said, I'm taking this setup anyway. I love 3s, I love inside candles, and I love failed 2s. So I love to see like a 3-2 setup anyway. So I would have been looking, once this 3 closed, I'm already looking to play, 3-2 anyway. But what gives me more confluence is this field, because we got the field on here. When that next candle opens, if we open above the field, or even if we hit this 236 and push up, I can get in right off the 236. I don't even have to wait on it to go 2 up off the 3, because I know we're respecting the field. But if you're a stratter and you're just waiting on your, no trigger, no trade type, you can wait on it to trigger and go 2 up and give you that 3-2. But you just got more confluence by looking at, hey, we stayed above this field level. So then again, once you get this 2 up, what do you do when this candle closes? You pull the field up. And look at the move we got after that. You got an inside candle. And see, I use order blocks and stuff too. So like, if you turn on Lux Algo, I know that I would have been getting out of the trade, because look, we had an order block up there and we don't trade calls going into resistance. So that would have made me exit my trade. But if you didn't have Lux Algo, you got this next candle that opened up, which was an inside candle. I'm trying to get out anyway. And then you can clearly see where I labeled my order block, the bottom of that daily order block. So all that would have told me to be selling in the strength. Like I would have actually been exiting this play anyway, because I know we was going into a daily order block, which is resistance. But remember how I said, once you measure your field, if we took this play and then we was looking for puts, anytime price closes below the 50%, I'm thinking it's a full reversal. So you see how this candle right here, this 10 o'clock candle or 11 a.m. Eastern, we close below that 668.14 or that 50%. That's when in my mind it's time to get in puts, because now I look at that as a full reversal. Anytime price closes below this 0.5 area, I'm looking for the other side, in which we was in calls. So now I'm thinking puts.
Let it stop.
What's that? No, I think somebody was just saying something.
Man,
So
that's
if you got
somebody
in right
that-
here on this candle, this 10 o'clock candle, you would have got in at 667.66 when it broke this candle, and you start riding it down. Now look at the move you would have got. Because now once you do this is something that I didn't bring up. Now once we was in calls. Once we actually start this move for the puts, once price actually breaks this 50% like we want it, remember what I said about measuring an actual downtrend. It's just like the candles open. So because bearish candles open at the top and they close at the bottom, once you decide to get in these puts, when this candle right here happened and it went 2 down, you don't need to keep this on the uptrend, because we're no longer worrying about measuring the uptrend. So now we need to move this to the top of this. You can even leave it at the top of here if you want, the highest candle. But now you're pulling it down to this candle because this is where you got in. So once you close and you want to continue to measure the downtrend, you just pull it down. And look how price is respecting the field. Remember, the 618 and the 382 is your golden area. Look at your inside candle. You see how the wick ran right to your 618 area? And it popped right back down. So that's letting you know that price is not going back up. You continue to go down with it. So your next candle came out, it jumped, it pushed up, but it fell right back down. So you continue to stay in. So you pull it all the way down. And even look at your green candle. When we did start pushing up, look what it tested. It tested this 50% area. All day, like this is what it does all day long. It just tests your levels. And this was the end of the day, because what we had 12:30. So if we ever close above this 664.59, that's when I'm thinking, like this candle right here closed at 664.30. So it was still a bearish candle. This green candle over here at 2:30 Eastern, that was the first candle that actually closed above your 50% level. But then you still didn't get anything because you had the rest of the day. It kind of just played between those levels. Look how it just played on your levels. But you should have had your move already. Like your move was there.
Show them that open high low close that they where I said I had missed it. I should have known that setup from the jump when Trump had talked.
What day was that? Was that Monday?
I think Friday.
No,
Was
Monday.
it the 7th?
Yep, yeah. That was Friday. Yep, that was Friday. So look in the video. I want somebody to tell me what I would do right here based on what I've already told you about how we mark the first candle and stuff. Give me a volunteer, like somebody tell me where you would put your field on the video. This is the 30-minute chart. This is today's price action. Based on what I was telling y'all, what we do every day, what I do every day as far as putting the fields, where would you place your field going into this day right here?
The last pre-market candle.
Yeah. We'll go from the low to the high of the pre-market first.
On pre-market, I was showing y'all how we measured that pre-market on the one, but we usually wait on the close of the first candle.
Those are the first candle. Okay.
So it would be the 10 or the 9 to 9:30.
This 9:30. Just this 9:30 candle, since you on the 30-minute chart, it's gonna be this first candle right here, which is 9:30 Eastern.
Okay.
That first long red candle going into that trend, that bearish trend.
Exactly. So I started from the top and I dragged it down to the bottom, and then look how prices reacted. You see that 50% level? Our next two candles literally was hitting this 50% level. And if you look at price, it's at that 50% is at 182.91. So you can see up above, we was never closing above that. Like this inside candle, we closed at 182.37. Even this 3, we closed at 182.77. So we were still bearish. We never closed above this 50%. When this next candle came out.
So that was like almost what, one retest at the 50%?
Exactly.
Well, two retests on the wicks. Yeah.
Even this third candle that ended up bearish, you see, we actually broke past the 50% and pushed up. That's why I said before we started the class, I say you can't be scared of where price pushes, because price likes to push up to scare you out of the trade, but where does it actually close at? Like we know this bearish candle opened up here. Yeah, we pushed up past the 50%, but we closed way down here below the field. So we were still in a downtrend. But some people would have cut their trade up here because it pushed up. They would have got out, but they'd have been wrong. So it's like if you look at this trend, we pull this back down. Look where price is hitting. Right at that 382, right at your golden zone again. If you look at this candle right here at 11:30 Eastern time, you got right there 181.75. If you look at the top, we actually hit 181.74. So it's bouncing right off of your golden zone. It's telling you to stay in. What happens on your next candle? It's an inside candle. We straddles for one, so it's an inside candle. So we know that's not telling us nothing. It's just prices trading sideways, but it's still respecting your field because it's hitting the bottom of your field and going right back down. Your next candle, you got a 2 down, so you still know it's puts. And then right after that, we dropped hard again, so you pull it right back down again. So now you got this inside candle, and you starting to go up again. What time is this? That's like 12:30. Now, like I said, you don't only use the fibs. I don't want you to just be like, oh, I got the fibs. I don't use nothing else. I use order blocks and things like that. So look at when I turn on Lux Algo, because you like, well, you said we stand in unless we hit the 50%. But look what we hit. We hit a discount zone down here. And if you look at it, it says a strong low. So normally we're not going to break these strong lows if you're familiar with Lux Algo. So because we already caught our move, we made money on this down move, and now we see this inside candle and price starts to go back up. I'm exiting my trade because we hit this discount zone. So I know that price is probably about to start playing around or trying to go back to the top, but we've already made our money.
Yeah.
So you don't enter until the first candle closes?
Only time I'll enter the market before the first candle closes if I have like a actionable signal, because like I said, at the end of the day, we are stradders. So like if I see a doji, a hammer, or like a hammer, a shooter, or like I said, I love threes. If I see an inside candle or an outside candle during pre-market, I play those. Like if I would have had a 3 right here and I went 3-2, yeah, I wouldn't wait on the first candle. I'm getting in off that 3-2. I'm jumping in as soon as we go 2 down off that 3. But if I don't do that, I'm marking this first candle no matter what.
Yeah.
Okay.
So yeah, I definitely don't always wait on no 30-minute orb. Like I don't just play a 30-minute orb setup, but no matter what price does after that first candle, I still get in and play my setup and look for it. Like this is Apple. This is Apple today.
And that first candle cleared pre-market low too.
It definitely did. So it's like you can look at Apple, and this is a good example because I didn't play Apple, but I see it looked like it had a lot of mixed up price action. So check this out. Like we had Apple today. You can mark this first candle right here. And what was the high of this candle? 250.80. Well, when that next candle opened up, you literally could have took the break of this candle. It went 3-2. You still would have got a dollar move because it was at 250.80 and we went up to 251.82. You would have caught a dollar move off that. I don't know if there was any order blocks. Yeah, see, when you turn on Lux Algo, we hit a premium zone. So it was telling you to get out. So that's why price pulled back down. Like I didn't know that until I turned it on, but that would have told me to exit my trade. But if you would have took that play, you made money. Now, what did we say about the 50%? If we look at this, we see that the 50% is 249. I want y'all to be able to see that. 249.71 is your 50% area. So I wouldn't take puts unless we broke 249.71. Where did this candle close? 249.86. Now you could always, once you got your fibs on here, you could literally bust down to a lower time frame if you play lower time frames. And you still look at those same levels. So like now you got 249.86 and it was 249.71. So this is the first candle. Looks like that closed above this. This 249.44, and then you would have got this move go down to what is this one? 249.85. So you had a little mixy price action today, but I'm not getting out of this trade. Seeing this big downtrend right here, especially on the 30-minute, like I'm not leaving this trade until it breaks. Like, because if you're trading strat, once you if you entered off this candle right here, your trade is not invalidated unless it breaks the top of this candle. So like I said, at the end of the day, you still want to be thinking strat minded too, even though you're utilizing the fields as like an extra level of confluence. You're not just getting out of your trades if it hasn't broken your levels. So like you can clearly see once you start breaking down from this 50%, you could have got this move. And I know a lot of people hate Apple. I think Kelly's one of them. She on this call. Like she stay playing Apple because Apple can do a lot of back and forth on you a lot of times. And like you say, nothing works 100% of the time, but I'm literally just pulling up different tickers.
Apple remind me of women from Acres Home.
Oh man, don't go there. No, Sal, I think this is Friday. This was that day you was talking about. And I like this move because everything, I think most of these stocks this day started out bullish. They all had this bullish move going forward. Meta don't have much because it was almost like a doji. But you could clearly see even from this 3, we marked this first candle of Meta from that Friday drop. And then we had this second candle, which was an inside candle. So we shouldn't be trading inside anyway. So we got this inside candle. And what happens on the next candle? The thing starts dumping. So literally you can either leave it on the high, because I like to measure from the highest candle, like I say, to the low. Even though this wasn't a bearish candle, I'm still measuring from the highest the prices went down to this low right here. And then look how it plays out for you. As price starts going down, we nowhere near the 618. That's your pullback. You nowhere near it. So as soon as this candle opens, like I said, you really don't even have to wait on a 2 down if you got your fib open, because it didn't even get back into your fib range. You don't even have to wait on it to go 2 down. You already know it's down. You know price is still in the downtrend. And look how it starts playing out for you the rest of the day. It's like, even when these green candles, this is a fail 2 down because we broke the low, but then we closed green. But would you take calls? No, for one, we in a deep downtrend, but then look at your field. We didn't even get back to the 618, so I'm not even thinking about calls. So you continue to stay in your puts. You pull it down again because you're still in your puts. And let's say this is what I wanted to show you. I'm glad I've seen a 3. Now we know from Strat World the 3s are like 3 is basically forming the same thing that I say I don't like, those broadening formations. But let's say you was a guy that woke up late, you missed this whole move, and you like, dang, can I still get in? Just take the top of this, put the fib on this 3 right here and measure this. What is price telling you to the right? We had another fail 2 down right after this 3, but it didn't get anywhere near the pullback range. And then we got a 2 up here that a lot of people probably would have got scared of. But where did it go? It actually went back to that 50%, like a little bit past it, but it broke right back down. And then what did it do? Continue the trend. So if you pull this down in here, you can see that price is pushing up, which would scare a lot of people out. But price hasn't did anything, because every time it goes up, it's coming right back down. So you literally continue to pull your field down and just look at your levels. Every time we push up, look where it's going, right past your 618. And if it tries to go up, it tries to get to your 50% and it comes right back down. That's what you mean by respecting the field. As long as you're respecting your levels, you don't get out of your trade.
Right.
You clearly, you stay in this trade the whole time. Oh, actually, see, that was 1600 for me. So that's 5 o'clock Eastern time. So see, the market is already closed. So you done made your cash, but right here we was closed on this last green candle. So you had all this from the whole day. And this is without turning on, like I mentioned earlier. I started with EMAs. I still use the 5 and 9 EMA. Those are the EMAs that I use. If you turn on EMAs and then you start turning on stuff like your Lux Algo, if you do use order blocks, it makes it very hard to not catch these trades. Like that's my 9 EMA, the yellow line. So we're staying below that 9 EMA, which is bearish anyway. And then you have your field levels that you're looking at. How can you not catch this move? I feel like it's nearly impossible to not catch the move when you got so many different levels of confluence. It's like, what would not keep you in the trade? Sal, feel free to speak up at any time if you if you got some questions or you want me to talk about something.
Nah, ain't Hand your business cut.
This was that Friday that you was talking about on
Hey, bro, I got one question for you. Hey,
yes,
you marking your interest, or you just basically going off of the field, off
Man,
the
look here.
price?
Man, look here. Hey, look here, bro. You always should mark your interest.
facts.
Why shouldn't you?
Yep.
You it sounds like you're trying to get a shortcut.
Setting up the price targets up and down, right?
Man, he always do. I mean, that's whatever system you use, you should do that.
Yeah, like you can see that from today. Like I still got my my chart marked up from today. So you can see where I had like off of yesterday's candle. See how I got 3-2 up day, 3-2 down day. Like I marked that no matter what. You can turn this Lux, I'll go back off. But yeah, I marked that every single day. Like once the market closed, I left it on today because I knew we was doing this class. But like typically I would already, mark this up here. Like, see, we got a fail 2 up already because price broke up
Hey,
today.
what would make you? Hey, see, what would make you ask a question like, "Do you mark?" I mean, like, like what make you ask that? Huh?
Damn, what the fuck thing is? Trying to unmute. I'm unmuted. Okay. No, I was looking at they got indicators that automatically put the prices on there too, though. That's what I was looking at
What you mean you automatically put the prices on there?
on the indicator.
It's not gonna put you what in it. You talking about the prices on the side of the screen? That's what you talking about? Or you talking about like entry for puts, entry for calls?
Yeah, both. No, I see the price on the charts on the right side. What I was saying is like, on the fields when they showing your levels like your 50% and all that, next to it, how they showing like beside the percentage, they got the price also that's right on the same level. That's what I was looking at.
Yeah, nah, I see what he's saying.
What are you talking about? That them like 3 up, 3-2 down day and stuff like that.
Yeah, that's what I think he's talking about when he was saying do I look at my like where I get in at? I thought he was talking about the levels on these fields. Like
Yeah,
how he's
I'm looking at the fields right here. All these levels are basically price targets. Either if you mark it at the high, or you start from the low, from the bottom of the bearish trend. Okay, I got you, brother.
Yeah, and like it said in that when you was reading the presentation, like the PowerPoint, all these levels that you see, like even though we're paying attention to the 50% level, the 382 and the 618 more than anything, because those are those golden zones and your 50% level, every last one of these levels are support and resistance. Like it's just like any other levels you would be reading on the chart. So as price continues to go down, like if I got in off this candle because I clearly see it, I marked this first candle and you see what price came up and this is why it says that fields can be used as your entry or exits as well. Because like I was telling y'all, we know we strategize, so we would get in on the bottom of this 2 candle. But if I'm using fibs and I see this candle open up way up here at the top, but it doesn't push up to this 382 or this 0.5, it opens up and starts dropping. I don't even have to wait on this to go 2 down. If I haven't entered yet, I can enter right here. When it hits this 236 and starts going down, I can already get in because I got the fib on, and I know that we still bearish. We bearish to me anyway because we under the 50%. But when price opens up and continues to start dropping down, I don't even have to wait on a 2 down. I can get in early. And then as I pull price down, you can clearly see these are levels. Like as we start going down, I'm looking at this like look at the next candle. We know the price is opening and it's pushing up here. But when price pushes up and we don't even get back to this 236, which is a shadow pullback, RTO 382, which is an actual pullback zone. Price pulls up and starts going right back down. You can enter the trade. But like I said, we strategists, so we can definitely wait on the 2 down if you're not already in. But it's clearly showing you that price is still in a downtrend. Like this is respecting your field. As long as you're staying under your levels, your field is being respected. And this was that, this was that Friday. So we know that we just continue to drop. Like if I put on this Lux algo that day, I wonder if it goes back. And actually, I'm not in bar replay, so it might not be actually showing like what it was showing on Friday. But you can see we staying underneath the your VWAP. And if you turn on them EMAs, I mean, we ain't even got to see them, but you can look at it. We clearly underneath the 9 EMA. So on top of having your field, if you use EMAs, like I know Sal uses EMAs just like me, that's what I'm saying. Like it makes it pretty difficult to not stay in your trades because a lot of people be saying, well, how can you hold something longer? Well, if you're respecting the candles and like I said, you have to let candles close. Even if you're using EMAs, you're supposed to be letting candles close because, for those that don't know how to use EMAs, like if you're using this 9 EMA and like I said, I use the 5 and 9, as long as we're staying underneath that 9 EMA and we're not closing above that EMA, I don't see any reason to get out of the trade. Like you see, we continue to test that 5 EMA, which is your blue line, and we just keep going back down. So when you add fibs to it, to what you already got going on, and you putting the fibs on here as well, and you pulling down with the fib, that's just a different level. That's just another level of confluence to, another thing to give you another tool to say, hey, my trade is still good. Like I don't have to exit this trade because it is respecting price. Price is respecting the field, and we're respecting the EMA. You should. And look, where did we bounce? When we made this outside candle right here, that's another one of these discount zones. This green area down here is a discount zone. And typically when you having a downtrend, if you're in a deep downtrend, most of the time when you finally do get a reversal, it's going to either be like a fail 2 or an outside candle. But even if I see a fail 2, like this was a fail 2 right here, but nothing told us to get out of the trade to start going back to the other side. So I wouldn't have just said, oh, damn, it's a fail 2. I'm going to just cut my puts. A lot of people do that. I mean, I have people call me asking me like, what do you think about SPY? What do you think about QQQ? And they jump out because they see that first green candle that was a fail 2 down. But okay, it was a fail 2, but we still not above, we haven't broke any levels. We still respecting this field. So why would you get out? You still respecting your EMA. Like, does that make sense to people? If there's anybody on here that's kind of been struggling with like staying in trades or wondering when they should be getting out of trades or how to hold. I mean, this is a way. Like, I don't know if you use VWAP, I don't know if you use EMAs, but all of those are tools that can be utilized, to help you stay in a trade. Another one.
I have a time question for you.
Yep.
Can you explain to folks whether or not you stay on the 30-minute throughout the day, or do you split between like 15-5 or go higher?
Me, hopefully you can see it because I'm on my actual. Let's see. There we go. Typically, I'm on my desktop, so I'm on my iPad right now. But this is the way that I normally trade. I use 2 time frames, so I'll have the 1 hour up on the right hand side, and I'll be using the 30-minute on the other side. But yeah, I jump around. Like sometimes I might want to go see what the day candle is doing. I might want to see if we got a 2 hour setup. Like I move around, but the main thing that I stay on is the 30-minute and the 1 hour. That's where I live at. That's where I day trade for the entire day. But like, yeah, if I want to go see what's going on a 2 hour, like see if we got a setup. I know some people like to use the 4 hour, but I typically will just go to the day chart to see if we're doing something on the day, or I'll just be on the 1 hour and the 30-minute. And when I'm on the day chart, I'm looking for those levels that I mentioned on when I was talking about on my PowerPoint. Like you see this PD50, this W50, this M50, like those are those 50% levels that I was talking about. Previous day 50%, week 50%, the month 50%. I look for those levels because those are strong levels that price always likes to go to as well. Like if you look at today's candle, you can see where when we hit this low, we hit a low of 658.93. But I know when I was looking at the price today, I mean, we look at Monday lows as well. You know, that's something that I pay attention to off of the Lux Algo. But even without that Monday low, I'm looking at this level. Like I'm looking at previous day 50. If we would have been closing below this, like if we had some candles on lower time frames closing below previous day 50, I would have been thinking just like on the Fibonacci, like, all right, if we closing below yesterday's, 50%, price may continue to go down and we might get this, 3-2 down. But the fact that we hit, the previous day 50 and bounce back up, I knew price didn't want to stay down there like that. So it's like that. Like I definitely be looking at these levels, Evan, like on different time frames. But yeah, as far as day trading, I stay on the hour and 30-minute all day.
Can we use an example from IWM?
Yep, I love IWM.
Man, I think you should have put that, not IWM, I think you should have did that on Lily or something,
Which one you say?
'Cause we don't know how to trade IWM.
Who don't know how to trade IWM?
No, I know how to trade it, but I've never
I'm
used
just
these
messing with him.
field. Oh, I've never used these field retracements, so I want to just make sure I understand it in combination with the strat.
They look pretty similar on all these on the ETFs. But like you say on IWM, I mean, do you normally trade on like the 15-minute or the
Yeah, I
30?
take my entries on the 15, and then I monitor like the 30 in the hour to stay in.
So see, you can still do the same thing like on this 15-minute candle.
Show her that 3-bar special.
Oh, that 3-bar special crazy. That 3-bar special crazy. I don't want to put that sauce out there. You know what? You know where that was. You know that where that was coming from. I don't want to put that sauce out there. So off of your 15-minute, you can clearly see.
You know she's from Fifth Ward too.
No, I'm from Third Ward.
Oh damn! So she's from the H Root.
Third Ward. You ain't go to Yates though.
I did not.
Nah, she
My
went.
whole family
She
went to
went to
Yates.
Worthing. She went to Worthing, bro.
No,
Oh,
I
so
did
you a
not.
rival.
No, I did not.
She a rival.
What you know about Worthing, man?
I'm a Yates baby, man.
Uh-oh.
And I went to Wheatley.
Oh,
Oh,
come
you a
on,
North Sider.
come on, man. So see, this is your look how your day played out. Like as far on IWM, like if you put it on this first candle, like we talked about, and we know that if we stay above that 50%, that 250.93, that price is bullish. But look how they tried to play you on that inside candle. You see how price went damn near all the way down. Like somebody might have jumped in thinking it was about to go 3-2 down and got burnt because price ended up pulling all the way back up before it closed. And we closed way back above the pullback range on that 382 area. And then price continued to go up. So it's like literally from this 251.74, you could have caught this move all the way up to 252.76. So it didn't give you much. But if you play IWM, you don't need much to get paid. And we went right into an order block. Like if you look at the top, that was an order block and it was a premium zone. So that's what was telling you to get out of the trade. Because you hit an order block and you hit that premium zone, which is usually where smart money like to start, buying it back down.
So with this strategy, you would have waited till the one candle got above the 0.5 level to enter.
Yep.
Okay.
And then you would have entered off this one because, like I said, we still do strat. So you still could have entered right off of this one candle. We got a 3-1-2 move right there. So you could have got in at this 251.64 and took it up to 252.76. That was like a dollar move.
That's a dollar move, yeah. It's pretty good, yeah.
Now, can you
I
tell me
would
from
have
the
entered.
class? I got a question for you. Can you tell me from where I got these fields right now, where would you enter puts?
The 2 candle that's going below the 0.5.
What price though? Looking at the field levels on the left.
Below 251.44.
When it closed below that. So you would look for a candle to close below 251.44. So like you said, it was this 2 candle. If you look at the top, you can see that this candle closed at 251.34, which was 10 cents under the 50%. And what did we do after that?
We just kept dropping.
We dropped the hill. So like
Mhm.
that's why I use the fields, because if you want to know like where would you enter, that's where you would enter. And then like I said, once you get in, once you would have took this candle and got in, now you don't need to measure this uptrend no more. You need to measure the downtrend. So you can go back to the top and pull it down here to this candle where you got in and see if price continues to respect your field. Like as you're going down, look how price is never getting past your little.
Ty, you know what her problem is though?
Gold is on.
What's that?
She get out of some place too soon.
See, this might help her because, like, as you pulling it down, remember 618 is your pullback range. So if you still dropping, price is still dropping, you pull it back down. Look where this candle, it went exactly to your golden zone. That's 618. Like you staying right there on the golden zone every time. So nothing's telling you to get out, and you under VWAP.
So as
Cause
long
look,
as price
she
is
was
under, oh, go ahead.
No, you go ahead. This you got the
Oh,
floor.
I just had a quick question. So as long as price is under that 618 level for puts, you don't get out.
Exactly. And this comes down to like it's still gonna be a trader, it's up to that trader, like how everybody has their strategy. Just like when people had a stop loss, some people might have a 20% stop loss, some people might be willing to risk 30%. It's gonna be the same way with the field because like I don't get out of a trade unless something closes above the 50%. But I know people that say, hey, if we close above the 618, I'm getting that. Like it really comes down to preference at the end of the day because everybody account size is different, what you're willing to risk is different. But I'm willing to let these candles close like that, like the message said on the PowerPoint. And fields we trust, I really trust the fields. So it's like I'm not going nowhere until the candle tell me to get out. If it closes and I lose money on that play, I just lose money on that play, and I'm willing to take my chance on the next play because I'm gonna be right more than I'm wrong.
Okay.
And I'm like I said, if you're looking at it as we continue to go down, I mean, I'm steady pulling it down for you. You can see we just continue to respect these levels. And like I said, right here, when you had this fail 2 down, because remember what I said about price, when price is dropping, normally if you're in a deep downtrend, when you know it's time to go back up, you'll usually either get a fail 2 down candle or you'll get a 3. Right here, you see this fail 2 down candle, but it's not just a fail 2 down. It's also coming out of an order block. You see my 4-hour order block that I got the lines drew, but even on this 15-minute chart, you got an order block right there. So right after we hit that order block, price started going back up. And where did it go back to test? The 50% area.
Yeah.
So you could have got in down here. Like some people, scalpers, they could have dropped down to a 5-minute when they hit the order block. They could play it all the way back up to this 250 area, which was your 50% level. And by the end, the market was basically closing. But you can see even after this deep downtrend today, price just tried to basically, recalibrate and get back to that 50% range.
Yeah.
And it's literally telling you what to do, like, especially when you add it with other tools. Like I said, you don't want to just use the fields by themselves. I mean, I don't use anything by itself. Like, we all trying to have as many tools as we can, when it comes to trading. Like, I ain't telling you to use 100 indicators, but it's like if you're using VWAP or your EMA, or even if you don't use no indicators and just the candles, you still looking at the candle anatomy. You're looking at the fail 2 downs. You're trying to see how price plays once you get a fail 2 down. So yeah, I mean, that's a payday. Like if you got in way up here from that 250 range, like you was talking about, price went all the way down to 247. I mean, that's $3. And
Yeah.
typically you can expect like $2 to $3 when you get a good move on like an IWM or any of the ETFs for that matter. Like typically you can expect like a $2 to $3 move before price might start, trying to retrace hard or pull back.
Yeah, see, those pullbacks normally scare me out the trade. So I
What do
think
you
this
actually
tool would
use?
be
Like,
helpful.
do you use any other stuff we was talking about, like EMAs or even VWAP?
No, right now I only use the strat and order blocks, but I'm gonna start using this tool in the EMA 9.
I mean, the EMAs are nice. I mean, obviously that's not part of the strat. I don't need the EMAs. Like most of the time, my chart looks like this. But if we're in a downtrend or a trend period, like if it's a trending day, a lot of times that's why I use that indicator where I can turn them on and off. I'll just go turn them on, and like see what price is doing. Like, okay, yeah, we are holding below, and then I might just turn them right back off. Like, I don't like to see them on my chart all the time. but I do have that indicator that I can just turn on, like see what's going on. If we in a deep trend, I like to turn my EMAs on, but I don't typically leave mine on like the whole time I'm trading. Like I like my
Okay.
chart to be as clear as possible. But if we are in the downtrend, you know, and I want to see what's going on, other than having PWAP on, like, yeah, I might turn my EMAs on just to see what price is doing.
Okay.
So for me, it's just another tool. Who else got some questions? Yeah, shoot anything.
How do you use the 0.382?
They're actually both the same. It depends on let me show you, because it depends on if the candle is bearish or bullish. So that's why they show it on when you look at the PowerPoint, it has that 382 and that 618. They basically comparing them together. Because look, if I put this on a bullish candle, you notice this fell 2 down where I'm putting it on the bottom and I'm pulling it to the top. See how the 382, because this is a bullish candle, the 382 is your golden zone, where it's the second line. You see that?
Yep, I see it.
Now I'm gonna put it on the bearish candle right next to it. So on the bearish candles, we start at the top, right? And we pull them down. Sometimes this thing be tripping. Hold on. Make sure it's doing the right thing. See, it's still showing the 382, so one of them was wrong, because the 618 should be maybe it was because of this candle. The 618 should be the second line on those bullish candles. Let me put it on this one. Every now and then, TradingView be doing like a little weird stuff. I'll see what me. Got me messing up. Hold up. Damn, my candle keeps switching up. But that's what you're gonna notice is when you putting your fibs on, that 618 and that 382, both of them are always gonna be in that same place. It's either one of them's gonna be that second line, and that's how it actually stays. But the 382 is either gonna be your pullback from the top, like if it's pulling back, and then if it's on the bearish candles and it's pulling up, sometimes it's the 618 area. There you go. It finally did it. So you see it on this bearish candle. See how 618 is your second level now? So it's in the same place as the 382, because when we had it on the bullish candle, you want the candles to come down and hit the 382 and go back up. If it's on the bearish candle, you want the candles to open and they might go up to the 618 and come back down. So it's always the second line. It just depends on if the candle is bearish or bullish. But what I notice on TradingView is every now and then, sometimes as you've seen, it'll put my 382 and 618, like it might switch them up. I don't really care how it comes out, because I know the levels is either 382 or 618. I'm still gonna look at them the same way. Like I want price to respect those levels. So that's why on the PowerPoint you see them together, like they both considered the golden zone. So whether you pull this thing from the top or the bottom, if your TradingView starts tripping, it don't matter. Your 50% gonna always be in the middle, and it's either gonna be your 382 or your 618 that you watching. If it hits those levels, you want them to be respecting it. If we in puts, you want it to be pulling up and going back to that second line and falling back down. If we in calls, you want price to open up and go down to the 382 and be pushing back up. That's the only difference, bro.
Got it. One more question. That 23.6, what exactly is that for?
That's actually considered a shallow pullback. Like your deeper pullbacks is those golden zones where it might, price. I mean, that's where you probably basically gonna start losing a little money. You're gonna see a little bit more money starting to go because you're pulling back a little further. It's like a deeper retracement. But the shallow pullback is like, all right, we just went to that 23. Like it's basically still the top of the candle. It just slightly pulled back and went right back up. So that's why they call it a shallow pullback.
Hey, Ty, on those shallow pullbacks, I love if I miss an impulsive move, if I miss an impulsive break of a level, I love to wait on a retracement right to that level, that 0.2386, like 0.25, because that's another entry. That's usually another entry on a smaller time frame. If you miss the first breakout, you let it pull
Exactly.
back to that, and then you confirm. All you need is like a 1 minute or to 2 minute candle below that, wick below that, and then you're back in, and then you probably get a continuation move. I love
Fact.
those entries.
So like you can see this from today on IWM, how you was asking about the 236. You see how the second candle when we went 3-2, it never even came back to this 236. But if it did, that would have been considered a shallow pullback because it didn't pull back a lot. It would have just went to this top of this 236 and popped right back up. But as you notice, as soon as price opened, it opened above the field. Those are those plays where I say I would get in before it even goes 3-2 because if price opens up and candles open up, it's gonna push down slightly to try to make that wick. But once it starts pushing back up and breaks that open print, like the opening price and going up, I'm already in a lot of times before it even triggers the 3-2 because I'm paying attention to that field. And if we stand above that fib, I already know we're bullish. So it's like I'm already riding the trend. I'm expecting the 3-2. It's like that's one of those things where that's more like advanced fibbing. But it's like if you're respecting your fib levels and you already looking for a 3-2 and we broke above the fib, you can literally get in like a little bit before. Like even if it would have hit this 2-3, the 236 for the shallow pullback, if price opened there, pushed down a little bit, made the wick and started pushing back up, I'll take that trade. That's why they said that the field levels can also be entries for you because you don't necessarily have to wait on that 3-2. Now, I would if we stratters, like I say, everybody says no trigger, no trade. We ain't got to rush to get in. You can definitely wait on this price to trigger and go 3-2 to the upside and just get in on the top of this 3 candle, like when it breaks the high. Just get in on the strap move. But I'm simply telling you, like, from a field perspective, you could get in early. So, I mean, anybody else got some questions?
I got a question, Ty.
Yep.
So, so I know this class is not particularly for that, but like the Lux algo, what all does that cover, and like what do you type in for that indicator? Because I hear it a lot, but I've never really dug into it yet.
They have a free version, which I don't really recommend. The free version used to be a little better than it is now, but they have a free version called Smart Money Concepts, and then I have the paid version, which is a price action concept. Like it's like a trade view membership.
Yeah, my own homeboy never asked me this question, but he want to ask Tyler this question. My own fucking homeboy.
Yeah, so it's like $30-something a month, man. But basically, what it is, I mean, it just points out the areas like the order blocks, the premium zone, the discount zone. You can even turn on fair value gaps. I mean, I know how to draw my own fair value gaps, so I don't really use that. But like, see, you can get fair value gaps and turn them on, and you'll see how it's putting those fair value gaps on there.
Okay, I have that because I pay for the full version. So yeah, okay. But I don't never see that like that big shaded area at the top like that.
That's this premium discount zone right here. Let's check.
Does that kind of work like upper and lower ADR as well?
Yeah, it's similar to that. I mean, all of this stuff ain't nothing but support and resistance.
Bro,
like,
look,
they come up with different names, but it's just.
I keep telling y'all seriously, bro. Look, all these goddamn shit, all these goddamn, cockamamie in the ass, fucking, abbreviations, lingos and shit. All that shit is support and resistance. Period.
Yeah, that's all it is.
That's it, huh?
Yeah, that's literally it.
Basically, that's all.
My homeboy don't want to trust me though. He gotta trust an outsider.
Look, I trust you, man. Come on now.
I guess
how you think I got here? How you think I got here? I trust you.
I guess we from different parts of the city or something. That's why. You make your pecan
north
candy.
Side, I'm south side, man. But I trust
make your pecan candy a little bit different or something. You heard?
Oh, so I'm gonna stop the recording so it don't be so long.
Yeah.